Gold prices are near record highs, but some of the big gold miners are running into escalating costs. For example, Newmont disappointing investors this week. We're joined now by gold specialist Rob Cohen, VP and Portfolio Manager at Scotia Global Asset Management, and you're manager of the Dynamic Precious Metals Fund, for example.
That's correct.
That's a biggie, well over, what is it, $700 million now?
Yeah, about 750 million, yeah.
And what do you think? Is this I mean, it's not new that we've seen escalating costs for the gold miners, but is that spoiling the party with bullion near record highs?
I think some of the problems where we've seen escalating costs might be isolated to certain companies, but generally speaking, costs and gold price go up for the same reasons. It's the devaluation and purchasing power of the dollar. So gold protects you against that erosion of purchasing power. But of course, costs will go up with it. But your profit, what's important here is profit margins are expanding, and they're at all-time highs.
For the gold industry.
For sure.
It seems that labor is the big problem in many countries for this sector.
Part of the inflation story. You know, I think we've seen inflation lag M2 money supply by about 16 months.
Okay.
So that's a typical thing. So basically, we had a massive expansion in M2 money supply during the COVID years, but it doesn't follow through into price levels until 16 months plus later. So the inflation we've seen as of late was to do with loose monetary policy from a few years ago, and that's what's happening now.
So that's interesting. So during COVID, the governments were desperate to...
and they were handing out money.
Yeah.
Yeah, and then they scratched their heads going, where did all this inflation come from? It was them.
That's
so they were fighting it with higher interest rates, but that's blaming the economy. It wasn't the economy, it was them.
And what about the supply chain snafus? Was that not part of it, the inflation?
I wouldn't say so. I would say it was a bit of an excuse and they were hiding behind it. But, you know, M2 money supply, gold moves up with M2 money supply. You know, it's really projecting what inflation is going to do. Gold's not going to wait for inflation to, you know, catch up and then gold moves up. It's going to move up way ahead of it. So what gold price is doing is predicting more inflation coming yet. And that's probably a lot to do with the amount of debt out there in the world. You know, the U.S. has got underfunded liabilities of $73 trillion. It's close to 100% of their GDP. By 2047, it would be 200%. And by 2098, way down the track, they're talking 500%. It's crazy.
And even their deficit this year, the federal deficit, will be north of 6% of GDP.
Yeah, 6.5%. And so they have to borrow the money just to deal with their funding gaps.
So essentially, you feel that this is going to relentlessly push down the US dollar, and that would usually be good for gold.
It's been a slow motion train wreck for a long time now, but now we're starting to see the beginning of the day of reckoning for the fiat money in general, but US dollar for sure.
When it comes down to the old philosophical question, should you own bullion, should you own the equities, is there a clear answer?
I like both, but for different reasons. You know, one advantage of the bullion, it's not even part of the stock market. But when you buy an ounce of gold, that's all you own. You own an ounce of gold. When you own an equity, like a gold miner, you're getting exploration upside, you are getting leverage to the profit margin. So say if you're making a 45% margin, as the gold price goes up, you get a multiplier effect. So it's risk reward, but there's certainly more reward by owning the miners. But
there is a risk, I guess, they go ahead with a huge acquisition, for example, that doesn't pay off.
That happens over and over again. I've seen that my whole career. You got to avoid the pitfalls.
Why? Well, I guess it's natural. People want to run a bigger company and get a bigger salary, be more prominent.
I think that's part of it. I think, you know, the gold sector as a whole is pretty small. So even some of the big companies, some of their excuses, like, well, if we get to at least this size, then we'll get on the radar of generalists.
Right, that old thing.
But then it creates problems. Like, for example, Newmont has acquired Goldcorp, and then they most recently acquired Newcrest out of Australia. Probably not the best acquisitions. So that's why you're seeing some of the problems in the stock price today.
Let's put up a 5-year chart for Newcrest because
Newmont.
Oh, I'm sorry, Newmont. Yeah, Newcrest was the Australian company, as you know, that was bought by Newmont. Have cockroaches emerged in the assets they bought, or it just hasn't been as great as?
Probably not as great. You still have rising costs, which the market was disappointed with. Some missed production, but what's happening here, even with that, gold price is going up, profit margins are growing, but my philosophy is I don't need to own this one. I'm going to invest in more interesting mid-cap, some exploration stories where I can really create some alpha.
Yeah, I'm just looking at your top holdings here as of the end of September. I mean, you've got Kinross in there and Agnico, but I don't see the other in your top holdings, the other giant global companies.
Not really. I like those two as far as the senior companies go, and then I start funneling down the market cap chain.
Tell us about Founders Metals. It's a stock you like, and they're exploring in Suriname. Yeah,
this is a fairly new discovery. I've been invested in the company for about 1.25 years now. Stock has gone from 27 cents when I first looked at it to about 3.75 today. We are the largest shareholder of the company. I think this is a really great, interesting 20,000 hectare geology package. They have several gold trends, but on one trend alone, they have over 10 kilometers on the trend, some fairly advanced targets at Upper and Lower Antino, Buze, and they have about 4 or 5 other targets, potpourri of geology. B2 Gold just bought 5% of the company, and they got Chris Taylor on the board of Great Bear fame, which is the big acquisition Kinross did about 3 years ago.
And then finally, your other idea, Snowline Gold. They're involved in a project in Yukon, and B2 Gold has been buying into this name as well.
Yeah, I think B2 Gold saves money on corporate development advisement, and they just follow what I do.
Oh, okay.
So yeah, B2 owns about 10% of the company. And this is a fabulous geological deposit up in the Yukon. They have about 7.2 million ounces or so in all categories. It's high grade, very low strip ratio, very world-class ore body. So I think this will be a mine in the future and one of our top holdings.
Snowline, one to watch. Rob, thank you very much indeed.
You're very welcome. Thank you.
Rob Cohen.